Alrighty, so now that's recording, so we're gonna be good there. Alright. No worries, dog. Hopefully we'll get you done working here soon. Alrighty. Welcome in, Kev, Elbow, Raj, Dave, and Dog. Alright. Let's go over a few more student requests. There we go. Okay. Welcome in, guys. I woke up at 9:30 and started to get on the computer, and an hour went by really fast. All right. I'm going to bring the questions over to this side so we can see. All right. I'm going to go over the questions first so we can kind of just answer what you guys immediately want to know. That way, if you guys don't have any more time, then you guys can hop out. And then if you guys have any additional questions, put them in the chats and we will go over those as well. And then we'll go through kind of everything or more topics that you guys want to go over. And then if we don't answer everything, continue to ask questions. But I want to focus on what you guys need because this is member oriented, not like just open to everybody. So we can really hone in on more things that you guys have questions about. So first question comes in. Let's see here. How to spot a covered call opportunity on stocks you own to generate income. Okay. If willing, let shares get called away on play. Okay. Zeta was at the middle band, not heavy sell-off day. What characteristics must you have or must be ticked to place CSPs? Would one contract and another contract lower strike, then prime for CSP? So, first thing I look for, placing covered calls. Okay. There's a couple things. Because there's a blend, right? You can learn the wheel strategy and put it into your other strategy, right? Where you just have covered calls and CSPs available to do it when you want, or there's just running the wheel strategy and letting things play out how they're going to play out. So there's kind of two ways. If you're really trying to maximize share price and just setting covered calls, you would actually be kind of more lagged, meaning like, let me go to one that's ran, I guess, Nibius. Okay. So for example, like Nibius, right? It just keeps going up, going up, going up. So for this, you would be more interested to really, it's going to be hard to find it on a green day, but you're really just trying to collect some premium. And what you're going to want to do is kind of when these flip bullish and bearish are going to be kind of when you want to place your covered calls. Because if this flips bearish, that means there's a little bit more downside. So you can go ahead and place a covered call, flips bearish, and then the second you kind of see it flipping positive or that it's found support somewhere, you can close it. I don't like to do that. I rather set my strike for where I want the target to be and let things play out, similar to how I just did HIMS, right? I did 32. I see that it's kind of holding strong. We know our target really is 40. So I went ahead and pushed it out to 40 strike. That way, I don't even have to think about it. It's just like if it gets to 40 and sells there, cool, I'm happy. I don't want to really play the little waves in between everything. It's just way more active. I really want everyone, not just me, but I would love for everyone to be able to, like, how my account right now is. And I'll pull it up for you guys. Okay. Let me go to the account. So, like, I literally don't have anything to do in my account until 7/17. So for the next 30 days, there's nothing for me to do unless we get such a pullback that I want to start deploying margin. That's the only time you'll probably see me right now trade um, and doing more CSPs or cover. I can't do any more cover calls. Everything's covered. But that means for the next 30 days, there's nothing for me to do except enjoy life and, talk to friends, talk to you guys, my friends, and everything like that. And that's kind of the goal, is to be able to do something every 30 days. I just want to trade, you know, it's not going to always happen on the perfect day, right? One day I do everything. That's not going to happen. But I would like to get to the point where we trade, and you have 30 days of nothing to do. Things are going to play out. In 30 days, I might have owned 0 shares of anything, and that's okay, because all my shares could get called away. And I'll just make money, and then we'll wait for the next opportunity. As you guys have seen in markets over and over again, an opportunity presents itself, I don't know, every other week, right? There's always something. You just think this rally's going to nonstop go, 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 and then all of a sudden we have this situation where you're like, holy crap, didn't think it would go back to this price, and it will. So it's never just, up, 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 up. There's always going to be pullbacks, okay? So as far as my opportune time goes, okay, what do I look for? Okay, I look for a high RSI. I like the RSI to be up here. If you guys don't know what RSI is, it's basically a company being overvalued or undervalued. It's just the simple way to think of it. Okay, when a company is higher up here at this 70, or if you're just only looking at our RSI box inside of our wheel table, okay, when this is up here towards 70, okay, that is when a company is becoming overvalued. So when we get to the top of these bands and the RSI is near 70, okay, then that is an opportune time to set a covered call. Can it keep going? Absolutely. Can you keep rolling? Absolutely, right? But those are your opportune times. Again, are you willing to sell the stock? That's got to be your question number one. What am I willing to sell the stock for is your question number two. Okay, and if you can't say I'm willing to sell whatever stock at this price, then you don't do the covered call. Can you do something super safe? Absolutely, right? You could place a 10 delta, 5 delta, and just collect a couple $100, $50, right? Money's money, guys. You grow your money. It doesn't matter if it's $50, $2. It doesn't matter. That is more money you had than not making a play, right? So you can absolutely do that. And one of my buddies is a huge fan. Every Thursday, on a Green Thursday, so I guess whenever a Green Thursday presents itself, he sets tomorrow covered calls. But he does like a 2 delta, like whatever it is, 2 cents, 3 cents, it doesn't matter. He's like, but it's free money. Why wouldn't I? So you can do that. But opportune time, preferably top of the band, green day, or even if it leaves the band, okay, leaves the band, boom. Usually if something leaves the band and the RSI is 70 plus, it's going to snap back, okay? So here it is again, leaves the band, a little bit more up, but then snaps right back, okay? Leaves the band above 70 RSI, snaps right back, okay? That's what you're kind of looking for. That's like the most opportune time, but are you given that opportunity every time? No. So that would be considered the opportune time, but you'll have other cases where you have like a SoFi, right? It left the band. It didn't get to 70 or above 70, but it got to the top band, covered call, okay? Bottom band, CSPs. Top band up here, 18, covered call, right? Now we're here. We don't have too much. Like you could do cover calls here. We're under this moving average. We still have our covered calls. But again, I did them for 20. So like the stock has a bit to go to get to 20. Needs to run 20%. Could it do it? Absolutely. So if I can definitely do it, it is a company I will roll if I need to. But I don't see it going just 20 and then continue going nonstop. 20, reject, pull back, retest, kind of like the 18 range, then go back up to 23, reject, go back up, 25, reject. Okay, so SoFi is usually not just a straight shot. There's a lot of waves in between there. So yeah, opportune time though, if you can just get close to this top half of the band and have a higher RSI, that is what you were looking for. Okay. Let me go see. Sorry, get this set up going. I can't look at the stream chat and the questions people are asking at the same time. So give me a sec to flip through. What's going on, Kev? Is the RSI a separate indicator or in the elite? RSI is, well, this RSI like table is in the master elite, the wheel table, which will tell you your RSI. But it doesn't, this is not in like the elite or momentum elite, but the RSI is inside that table. So if you needed to look at it, does that help you, Elwa? Awesome. Alrighty, let's go to the next question here. Alrighty. So the next one was Zeta was in the middle of the band. Okay. Anything that's in the middle of the band. Okay. Let's see if we can find anything that's in the middle of the band. I guess SoFi's in the middle of the band. Okay, there's not a huge spread here, which means the bands are getting tight, which usually means a move is coming. But when something's in the middle of the band and you're getting kind of a light red day, it's kind of similar question to how people position size into companies. What tells me I should buy more of SoFi and less of this company, right? Well, it always comes down to how much do you believe in that company and your risk reward, right? If your risk reward is 10 to 1, I'm probably going to go heavier into a 10 to 1 than I would into a 3 to 1, right? I'm going to go heavier into the better opportunity and a company I'm more bullish on long term and feel safe with, right? Although SoFi pulled back, it didn't pull back nearly as much as some other companies pulled back during the hard times of this kind of recent pullback. So it's a company that I'm willing to kind of put more money into because the volatility is not as insane. So when it's something like SoFi, middle of the band, give me a light red day, I'm comfortable doing CSPs, but it always comes down to how bullish you are and how aggressive you want to be. Now, placing a CSP is always safer than just outright buying a share, right? Or 100 shares. For the reason, there's a couple of reasons. We can roll, we can change the price, we can give ourselves more time. If the market was to say, we were like, oh my gosh, recession, we're screwed, and you're like, I'm not going to take this loss, right? Just play out this scenario. I'm not going to take this loss. I'm going to roll my CSP for SoFi. Hold on, I'll pull it up. Okay, I'm going to roll. Let's go to trade options. Sell a put, right? Roll an option. I could roll this option all the way out to January 2028 and say, yeah, I'll buy SoFi for 15 then, okay? And they're going to pay you to wait till then to buy the stock. I can get paid the whole time that I'm sitting here waiting for this stock to buy, and they're going to pay me $4 up front to do this. But now I made money. There's nothing for me to do. I'm going to own SoFi or I'm not going to own SoFi. The market recovers by then. If the market does recover, then you're going to be able to close this out for positive return, get all your capital back, right? We can adjust. When you outright buy shares, only thing you can do is set a covered call. You can set a covered call way out in advance. The problem with doing that more is because if the market was to recover, you now have to sit in that covered call because it's way out there, right? You have to sit in it because the market recovered. Now it's going against you, okay? But we like that we can adjust our CSPs and be a little bit more comfortable in the market. Okay, rolling will never pay you more than if you were to make the right move the first time. but it does still better your situation. It doesn't worsen your situation. Okay. But yeah, middle of the band, it's always going to be a personal preference. And really, you need to look at a couple other things. Low RSI, right? Is the company in the middle of the band, but the RSI is like, where this is bottom band, low RSI. Well, let's see if we can get a middle. I mean, we're still in this bottom half here in this kind of middle day, right? Like, I'm still good with the 40 RSI. 40 or lower, I'm still good with buying a company, right? That's really my like minimum or my highest RSI. Trying to get into the company, I'm looking for like a 40 RSI or lower. Okay. Volume is the highest on the third Friday. Okay. So monthly expiration dates, which we talk about. Okay. I'll go through these. Do we always look for the third Friday if done 30 days out, 30 to 40 delta? Yeah. So when I'm looking for my expiration date, it's usually the monthly. Okay. Now, on certain companies, you will want to, I don't know what that is. Certain companies, you will want to do a weekly. And the reason this comes up is for a company like BBAI or even, let's go with Archer since we just did an Archer. Okay. So, sell, put, July 17th. You can see we have $5, right? $4, $6. We just go up in dollars. If we switch to a weekly expiration date, you will get the $5.50, the $5, the $4.50, the $4. Okay. Now, if I want one of those 50-cent increments, I will do a weekly. Okay. But typically, if it doesn't matter, it's just the daily stuff or the whole dollar sums, I will do the monthlies. And typically it's the monthlies. I don't normally will do the 50 cents unless it's an inexpensive stock, kind of like an Archer or a BBAI. That's really the only time when I want to get the 50-cent difference, because I just waiting for it to go down to like the 5 or the 4 is just too big of a jump. Like if this was 498, I'd want to do a 450, right? Like something like that. So yeah, I typically will do the third Friday. Especially because of the volume. Like you can see open interest, 6,500. If I go to the July 10th, it's 224 volume or 26 volume and 343. There's just significantly less volume on the weeklies than there is on the monthly ones. And again, I try to limit my monthly ones to 45 days out because the theta decay doesn't really kick in till 45 days or less. And then a few things to focus on, right? When are their earnings? Am I setting a covered call over a catalyst? Okay. We don't want to do that. Okay. Or a CSP. Because what happens? We ran into this situation with EOS, right? EOSE. They had earnings. It dropped 50%. You're stuck in an option, right? Mess that up. Won't happen again. So you got to look at what kind of catalyst they have. And are you setting that expiration date over one of those catalysts? Okay. When placing covered call, do we look to adjust price or buy price? Is Pat in here to help with that question? It's Pat, sorry. Not in here. I didn't understand the question completely. Unless someone else does. When placing a cover call, do we look at adjust price or buy price? Okay, if you're talking about the spread and everything here, so there's the ask price of 51 cents and the bid price here, you really try to get as much premium as you can. Robinhood, for me, does it where if I don't know if it'll do it right now. Let's just say it won't put it. But typically it'll say like low fill likely, medium fill likely, high fill. Okay. When you're trying to get premium, you want to get as much premium as you can, but you want to obviously get it filled. If you put it too high, you're not going to get filled. And I really don't try to stress myself out with getting like the best fill possible, because I don't want to sit here and look. If I'm making a decision in the stock market and a penny or 2 pennies really changes what my thought process is on the play itself, it's probably not a play I should be getting into, right? That means there is too much risk at stake for me to be placing this trade if that penny or 2 pennies really changes my mind. Okay? So just remember that. Now, I'm not saying go ahead and just give them what they want and only collect 35 cents. No, still go for the mid, but go for the mid and give yourself a little bit, right? Try to get that first. And if you just can't get it, go down, fill it, leave your computer, right? Like, I'm not going to stay here trying to get the best fill. I'm not. I'm just going to do it. I see the play. Cool. Happy with it. Let's go. Okay. From a tax standpoint, on a taxable account, I'm not a tax advisor, so whatever I'm about to say is just based on my personal knowledge. Have no tax, whatever. From a tax standpoint, on a taxable account, do we close/roll when price has not moved on the last day? Either way, it's a taxable event. Rolling it, closing it, it doesn't matter. So there is no beneficial way. Now, some people will, for covered call sides of thing, continue to roll because they don't want the shares called away. What they'll do is that they will continue to roll, but they won't move the strike price. They'll just continue to roll, collect the premium, and like, especially going into the second half of the year, right? Let's just say, I know one of us has covered calls. I have covered calls. So let's just say I have covered calls on HIMS at 40, right? HIMS goes to 40, HIMS goes to 50, and I'm like, okay, well, we're almost to the second half of the year, and I don't want to pay taxes on the share price gain I'm going to take. What I want to do is I want to continue to roll month to month to $40, keep my $40 strike month to month, collect the premium. In January 2027, I will let them go for 40. That way my share price appreciation, I don't pay taxes on until the following year. Okay. But other than that, just the premium side of things, closing it, rolling it, there's a taxable event when you close or roll that position and open up a new one. It's just a new event. Okay. Under what situation would you not roll and let the shares get assigned, then look for a covered call? Okay. I'm assuming for a CSP. So CSP not getting assigned and rolling it is like, I did it for Archer for a while when I was getting assigned at $7. I rolled it, just kept getting 10 cents. I was like, there's no sign of reversal, right? There's no sign that it's going to reverse. So I might as well, until I get a sign that it's going to reverse, I should just go ahead and roll, collect 5 cents. Doesn't matter, because you're not going to do anything really once you have the shares. So I might as well continue to roll the CSP and either better my premium, or I end up not getting the shares and I keep all that premium. And then it really comes down to, if you're at the bottom of the band, set a CSP and it kept going, right, you're going to lower your cost average down and do it again. Always comes down to how bullish you are. There are other indicators, like if you were on our chart and did a CSP. Let me go to Archer, like this one, right? We did a CSP. Let's just say, fast forward, we're about to get assigned our CSP, and this kind of still looks like this. This isn't like turned bullish by any means, right? You can roll it, okay? If I was getting assigned at 7 and this still looks like this, I would probably roll it. Why? Because once this does turn bullish, then it'll start making its way back to 7, and hopefully that timing works out a little bit better, okay? But if we are doing this right and focusing on, right, low RSI, bottom band, low RSI, bottom band, right, we shouldn't run into too many situations like that. It is situations where you start playing with that middle area or doing it with like a high RSI or trying to get a little more aggressive. Those scenarios, but if you do those scenarios when you are trying to be a little bit more aggressive, make sure your more aggressive plays you are making are the low end of your dollar cost average. And what I mean by that is when, like for example, Archer, Okay. If I was trying to get aggressive in this middle area, because I'm like, oh, we're going to go higher, blah, 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 right? In this aggressive situation, I'm going to do 2 contracts. But on this lower situation here, I'm going to do 5 contracts, right? Because I want this really good deal to eat away at this aggressive take, right? I want it to be 2 times more attractive. When you are playing the more aggressive, not as risk reward in your favor, you don't go heavy into those situations, right? You don't go heavy here, you go heavy here. Okay? You can still dabble here. It's not the end of the world if you do it right, right? 1 contract here, 1 contract here, 5 contracts here. Got a dollar cost average down, and you want to save your bigger buys for the better opportunities, the cheaper opportunities to take advantage of. Okay? Momentum indicator. Purple is bearish, but lower band, so we CSP. How do we properly read the chill momentum indicator? Okay, chill momentum indicator. Right here. Oops, that's going to be big. All right, so the purple and orange. Okay, you guys have a few settings in here. You have quicker and standard. Okay, so the standard MACD, these are just MACD symbols, the same MACD symbols you guys saw here. Okay, this blue and orange one. Okay, is the same thing as this purple and orange. Okay, the histogram on this one is only how close this line is. This histogram does nothing more than what the lines tell you. Okay, when this crosses, see how it crosses? It will turn green. That's all the histogram is telling you. It turned green. So I found that on the MACD, really the histogram is not necessary, right? When they get separated, they become bigger, bigger, bigger. When they get closer and everything, they start getting smaller, smaller, smaller. And then when they cross, they flip colors, okay? So I've realized that the lines were more important. So what we did on the Momentum Elite, the lines are just the MACD. Now, the histogram part, okay, on this is going to be very similar to this momentum bar, okay? So our histogram on our Momentum Elite is what this is. So I took 2 line charts, okay? MACD line, MACD, or our momentum lines. So this momentum line is the histogram, and these MACD lines are our lines here. So we can follow 2 different types of momentum, and when they can go together, it works beautifully. Now, I prefer for my situation to be set up on the quicker, and the reason for that is because with, obviously if you pay for more things, you gain more access to things. So I can run a lot of indicators all at once. So I can see the MACD, that is the lagging standard length, okay? I can see that here. And then I can see the quicker one on this one. So, and the quicker one is way less lag, okay? But it gives more false signals. There's a balance between it. Okay. Now if you just can only do one, just do the standard. That's the better of the 2. It requires less false signals to play out. So, but the diamonds trigger, okay? The diamonds trigger when this, you can see diamond here, okay? Do you see that our momentum, let me just close these ones because I know it's probably small on your guys' screens. All these ones. Okay. Do you see right here, diamond add? This flipped green. Okay, diamond, boom. Okay, flipped green. Guess what? There's your diamond again. Okay, so when these histograms on the Momentum Elite flip green, they will give you a diamond. Will they give you a diamond every time? No, because it also takes into account the company being overvalued or undervalued. The same reason you never see a buy alert up here when you are starting to see trims in the pink, right? Because it's pink, it's overvalued. This is not the point where you should have been buying. You had plenty of opportunity in the neon green buying opportunities, okay? So 1, 2, 3, 4, dollar cost averaging into it. Now you got 3 trims, okay? So the histogram is just telling you when the diamonds are going to trigger as momentum flips. So that's what the diamonds are for. It's never going to also tell you to trim okay, if the stock is undervalued. Why? Why are we selling a company that's undervalued, right? So it's not going to tell you to trim here. But if you learn, okay, this flipped red, boom, and your histogram or your MACD lines flipped negative right here, this would have been your sell diamond here. So if you can learn how to read the momentum elite, you don't need, ultimately, you don't need the diamonds, okay? Because it will tell you. So it's good to know how to use it, okay? When you see this turn red, boom. I know another question we're going to get to, and I'll answer it right now, is what are the gray candles? The gray candles are a neutral zone, okay? I'm not bullish, I'm not overvalued, and I'm not undervalued. You're sitting on the RSI right at the right at that middle line, right? Remember how I said like RSI 40 or lower, that's undervalued. RSI 60 or higher is overvalued. Okay, well between 60 and 40 is kind of the neutral zone. It's not overvalued, it's not undervalued. You know, your call, like if you didn't buy, let's just say, right? If you didn't buy enough of this and you're like, I want to add to my position, okay, then go ahead and add some in your gray zone, in your neutral zone, right? But if you bought enough here, then there's no need to listen to the neutral zones, right? But it's just telling you it's not overvalued or undervalued. It's just neutral. You can add, you don't have to, right? Better to take advantage of the deeper value than it is to listen to some neutrals for this reason, right? Neutral, drop. Okay. Some neutrals do take off. I'm not saying they don't. I'm just saying that typically you want to take advantage. So you can see here, right? Short-lived, but it was a pump. Boom. Take advantage. And then you got the dip again. Okay. I'm going to see if there's string questions real quick. One sec. All right. I've noticed since switching to Robinhood that I don't always get filled on my whole order. Sometimes it's a partial fill. That never happened with Schwab. Also, Schwab seemed to have a little better fill prices outside that Robinhood is far superior to Schwab. So, yes, Robinhood is known for not getting the best fills. Now, when I was with Fidelity, when I looked at it, it wasn't a huge difference, like a penny maybe. But what I had to look at was the amount of contracts that I place, right? Schwab charges 64 cents a contract. Robinhood charges you 4 cents a contract. So each company is going to make their money. Some are going to give you some better fills. Some are going to charge you more per contract. Okay. I noticed that I was doing way too many contracts, that the fill didn't really make a huge difference. So there. Also, Robinhood running the wheel is significantly easier than Fidelity or Schwab's mobile app and running the wheel strategy. It's right. Robinhood does 2-3 clicks and you're pretty much already rolling a position, closing a position. It's pretty straightforward. Yeah, and that's what you're ultimately paying for. Are the fills the best? No, but if I'm putting my limit order in and typing in my price and I'm just saying that's the price I want and close it, place your order, it'll fill when it fills. I do hate that Robinhood doesn't have, and I'm sure they will add it eventually, but it doesn't have like a fill all only kind of thing, right? Sell all kind of, and I miss that part too. I hate that when I'm like, oh, I want 10 contracts and I get 3. And then I have to lower my price by a penny so I can get the rest. Yeah, it's annoying. Do I have to change it? No, I could just let it play out. And then if I need more tomorrow or, the next red day, I'll get the rest, right? But the contract price that they are charging you at Schwab and Fidelity was the main reason, and the user friendliness of Robinhood for running the wheel strategy. But yeah, 64 cents per contract. It adds up very quickly. So yeah, if I do have Fidelity still, so we can look at a few comparisons. I don't know if it'll be very accurate after hours, but I have Fidelity for my health savings account because Robinhood doesn't offer that. So, all right, let's go to the next student question. For swing plays, do you look at 2 hour or 4 hour? Okay, this is the 2 hour I focus on more, but I do look at the 4 hour, and the only reason I really look at the 4 hour, and it's easier to see it on here, right? If I look at the 2 hour, what do I see? Okay, I see it flipped. Okay, do I see the 4 hour flipped? No, the 4 hour hasn't flipped yet. And the daily is still trending down. So I like to see the trend. So like same thing when we said the other day, right? I see there's going to be a 2 hour time frame. It looks like it's ready to bounce. What I looked at was not only the 2 hour time frame, but what I also looked at was the 1 hour. Okay, the 1 hour was already bullish. Okay, the 2 hours really close. I'm assuming that 1 hour is going to lead into that 2 hour. So you can kind of like look into gradually like where, so like you can see the 30-minute is curling down, the 1 hour is getting closer. Okay, so like I kind of look into a few of the time frames, but I mainly focus on 2 hour, the daily, and the weekly. Those are my main three time frames. Alrighty, so if we want to see moving averages and the Bollinger Band on TradingView, do you recommend purchasing more indicators? Okay, so that's been fixed, right? I put out, if you guys haven't done it yet, there is a Chill Wheel Elite. Okay, this indicator is the Bollinger Bands, the two moving averages I use, and the wheel strategy table. Okay, so all of that is included in one. So that's one indicator you would have on your TradingView. Okay, and if you can only have two, I recommend it being just the standard MACD or the Chill Momentum Elite. Up to you on like easy, not easy kind of trading. Okay, MACD is the easy trading. This is what I just use for the wheel strategy. I just don't want to overthink things. Just make life simple. Let things play out. You don't need the RSI one. Why? Because you have it here on the table. So you can see RSI is low, 34. You can see that it was a red day. See how all these colors line up? That means a CSP is good to go. You can place a CSP that day. Okay? You want all the colors to line up. If I can get one here, covered call. So the RSI is not super overvalued here. Okay? So you don't have to place a covered call. You can place a covered call, but it's not too overvalued. It's 53, right? We're looking for closer to like these 64s. You can see this gap fill right here. This is what we're looking for, close into this. And I would assume we kind of still reject it. It's just a gap fill. Normally does. Or we come up to the 68 and then reject. We'll see how it plays out. The daily's curling. That's good. But the RSI is right here for you. So you just need these two. Okay. I know some people are having trouble. I don't know why. It's been uploaded the same way all the other ones have been uploaded. If you don't know how to, please let me know. We can hop on a stream later and talk about it. Okay, when I'm assigned shares from a cash secured put, do you sell covered calls immediately or do you wait for the share price to go up? Okay, so there's a few things. So inside of the Discord, there is a student classroom section. Okay. You'll mosey on over to the wheel strategy. And there's about 6 slides, can read into them. But what I'll go over is the simple side of it. And what you want to do is you want to place CSPs at the bottom of the band, okay, and covered calls on the top half of the band. So if you got assigned your shares at, let's just say $6, okay, you would wait for Archer to populate back up to at least the top half of the band at 613. Okay, once it populates somewhere up here, now you're going to look for an opportunity with the RSI higher, or when this is triggering to say covered calls are good to go. If you want to be more aggressive and just place covered calls and you don't care about the premium and you're just trying to like, I bought it for 6, I'm going to sell it for 6, just collect the premium, it is what it is. Yeah, you can set them at any time. There's no losing, it's just optimizing, right? But yeah, you set covered calls at the top half of the band. Student request. And you guys can put more questions in the chat room. When I get done with one person's, I check the chat to see if there's any questions. Also, if I wanted to start generating income immediately off those shares, do you try to sell out of the money calls or do you get closer to the price for higher premiums? Okay, so this comes down to a personal income need, right? I talked about my wife leaving her job, right? And I was like, I'm going to have to generate more income. That means I can't go as high as a strike price as I would want to. So let me go to hymns, for example. All right. So this comes down to an income goal per month. So if you have an income goal of $2,000, okay, and for every 30 days, so July 17th is 34 days, okay. I know it's not the opportune time, it's a red day. I'm just going to continue using it, okay. And you own, let's just say 1,000 shares. We're just going to go with 1,000 shares. So that's 10 contracts, okay. And you need to generate $2,000. Okay, well, this achieves your goal, 28. Is it the most ideal strike price? No. But your day-to-day life of bills needing to be paid trumps the whole stock market opportunity. It could go here. Shit can hit the fan at any moment, right? We could be surprised by the whole war situation. Something crazy can happen. You don't know. We don't know. There's a whole lot of other people on the other side of the world that are planning things against us, right? You don't know. So day-to-day life needs to be taken care of. Take care of that. Stock market will be there. Another opportunity will be there. It doesn't matter. Move on, okay? Now, if you have other shares and stuff, right, and you're looking opportune time, here's your 32, but, right, this is only going to give you $1,100, but you're going to sell your stock for $4 more per share. So yes, this does make you more money on that date if the stock sells for 32. Again, take care of what is needed to be taken care of at home first. Capitalizing on other ends of the market and the stock appreciation price and everything is second to life. Make sure life is taken care of first. Because if life isn't taken care of first, then you eventually will not have any money to invest, right? So this is the reason why we learn this, is to be able to take care of things at home. But if you don't need the income, then no, I am setting strike prices based on 30 delta. I'm setting strike prices based on resistance levels or moving averages. And that's why I chose 32 to start. But then I was like, I'm a HIMSS believer and I have a hard time letting go at 32 once I thought about it. But 33 is the moving average. So that's really what I was thinking. I was like, okay, come up here, reject that, then bounce back down here. That's what I was thinking game plan. I was like, but I'm really not comfortable if that doesn't work out. So I'd rather just sell it for the price I want to sell it for and let more time be on that side. So, which it's working out. It's fine. So yeah. Try to sell money, price here, price. When you're looking at the Bollinger Bands to determine whether or not to enter a CSP, are you looking at the daily, weekly, or monthly? Okay, so you guys know me. I like to look at the weekly to understand my potential drop. Like we talked about in the last bull run, how far things get away from the moving averages should scare you because they tend to come back to the moving averages. So it's always good to focus on the weekly because they do fall back to the weekly. But day-to-day wheel strategy, just follow the daily time frame. Just stay on the daily time frame. Still look 30 days out, 45 days, no more. And things will bounce around in that time frame. It might drop way below your strike. You panic a little bit and it bounces back. That's what happens. But when we set these strikes for what we want to own things for and what we are willing to sell things for, either way we win. And you just need to remember that. Okay. Mainly focus on the daily time frame. I do look at the weekly to understand, potential drops, where the moving averages are. But day to day, keeping life simple, I focus on the daily time frame. Okay. All right, let's see if you guys have any questions. Nope, no questions. All right. You guys can drop them in the chats once I'm done getting through each person, and then we'll go through. We can go through Fibonacci's. We can go through a bunch of stuff. Some stocks react to the EMA. Some react to the moving averages. What decides which indicator to use first? Like, what is the hierarchy of indicators? Yeah, not every stock follows every moving average the same. That is very true. So for me, I always use the weighted moving average for the 1 week. Okay, that's the one I always use to know kind of where the bigger time frame 200 is sitting at. Okay, so the big difference between the SMA and the EMA is that the EMA reacts to the price action that is most recent. SMA takes into account pretty much all of it equally. And the problem with SMA is that it lags. It has a higher lag rate. EMA is more reactive, which can be good. It could also be bad. Because it doesn't take into account everything equally. It takes into account the most recent price action. And I focus mainly on, and I flopped a couple times, okay? But I mainly start with the lag. And the reason I start with the lag is because I want to know, kind of worst case scenario, where's that moving average, right? Meaning, because typically a lagging moving average is going to be lower than where the EMA is, because the EMA is acting quicker to the recent price actions. So I want to know the lagged price. And it typically is pretty close. The good thing is with our indicator that you just do this and then you can flip it, right? Boom, boom. So for example, I know this chart has a lot going on, but you can see the EMA is 67 and the SMA is 67.44. Not a whole lot of difference on that one, right? I mainly start with the SMAs though. But it's mainly like each person's going to be completely different. Each person follows different things separately. And I find that the SMA gives me kind of better reactions. But again, our indicator allows us to quickly flip EMA, SMA, see what's kind of lining up better, and then you can chart with that one. So, for example, there's your EMA 200. I think EMA on that one is acting better. And EMA 50 is irrelevant. It's not doing anything for you. But I focus on the SMA just because I always like to know the worst case of where things could lag to. Yeah. Kevon, I see you typing. I'll wait a sec. I'll give you a sec to type. All right. All right, Kenny has some questions. I don't know if Kenny's in here. Is Kenny in here? Nope, Kenny will watch it later. Pat, were you in here earlier when I was answering your questions in the student requests? Profit targets and exit strategy. Recommend profit target levels based on performance and milestones. 50, 75%, 100%, 100% plus. For leaps positioning, additionally, outline an exit strategy such as recovering the initial capital invested before reaching the midpoint of the contract duration. Okay. Running the wheel strategy. Okay. So running the wheel strategy, I like the rule of closing my position at 80%. Okay. Now, if I got 50% in the first day, go ahead and most likely just close that position, right? You got so much of it and there's so much time left, you might as well close it because maybe you get a little relief bounce and you can reset it. A lot of things, that's a kind of a personal preference. 80% is typically the rule. And the reason 80% is typically the rule is because when it gets to 80%, there's usually the remaining 20% isn't worth the remaining amount of time to hold that or the risk it holds. Okay, because picture this. We have a covered call on IREN. IREN is at 80%. We have a covered call at 70. The stock is 55, right? And we're at 80%. We still have a week left. Okay. IREN announces a hyperscaler contract Monday morning. Okay. That stock, or Monday morning before market open, you can't close that option, right? While pre-market. The stock is now up 20%. Okay. Now you're running into a problem here, right? So the risk is not worth the remaining premium at 80% return, usually. If the stock is nowhere near getting close, then sure, hold out if you want. But I think honestly, closing at 80%, you're getting a green opportunity within the next week, and getting to reset the contract is a better opportunity than what is remaining left in that contract. As far as when buying your leaps or short-term contracts and everything, that is really, I don't have a 50%, 75%, 100% rule. Now, I do like the rule when you do get to 100%, sell half and let the runners run, right? Take all the profit or take all the money you put into the initial play out of the market. So now you can't lose. You can lose all the unrealized gains, yes, but you won't lose your initial investment. So therefore, it was a free play. Okay. Now, the rest of it's tough. Leaps, and the reason I sold before this most recent market correction, right, came into play was, and I timed it 1 or 2 days late on selling, right? We could have made a little bit more, yes, but options go against you way faster, and that's why I'm more trigger happy to take gains on long calls, because a flip of a hat or anything like that, those options quickly go from 60% gains to flat, negative 20%. They go against you quick. Okay. So I prefer locking those in a lot sooner than share price or shares. Just because shares, I don't have a ticking time bomb on they don't expire. I just own it and hold it and play our game. So yeah, I don't really have a rule on the 50, 75%. If you see that your RSI is getting pretty high, right? That's pretty much a tell sign that you're getting a little overvalued. Probably a good idea to start taking some profits. But we kind of look at all the indicators, right? Bearish on the MACD, high RSI. We kind of use those to kind of get an idea for me on when to kind of start closing out some profits. Question number 2, stock selection criteria for the wheel strategy. Identifying key criteria for selecting stocks to run the wheel strategy, including considerations such as lower prices to allow more affordable collateral requirements and ability to maintain multiple active cash secured put positions. Yes, criteria. They got to have options, obviously. Step 2 is that they need to have some actual volume taking place. If they don't have any volume taking place or high open interest or a big spread, right? I want close spreads. This is fine. Okay. I want good open interest and good volume. Okay. For example, we talked about INFQ, and why I closed our covered call was because it wasn't moving the way I wanted it to. Why? Because the volume is not great. Okay. It's right here, but it's a 15-cent spread. We were on 20, right? Yeah, 20. So it was 5 and 10, and this has to close out in 5-cent increments. So I was just like, yeah, it's not moving the way I want. You can only go from July, and if I wanted to roll this, I would have to go to October. That's too far of a roll. So I want to see something more like HIMS. You saw how that went from July to October. Um, when you're trading these options, this is June, July, July. Like, you want to see flexibility in rolling options. Would be a good sign of one that has options, because they won't give this to a company that doesn't have a lot of activity happening on the option chain. So we want to see that. We want to see tight spreads. 26 to 29. Good open interest, good amount of volume, implied volatility. The higher the implied volatility, guys, the more the stock moves. The stock goes up and down very fast, okay? That's why you get paid a juicier premium, is because the company can go against you extremely fast, and it can go against you up or down really fast. So therefore, they compensate you for a higher implied volatility, which means you're getting paid more premium, but the price action is far riskier. But if you like the company long term, and that's always the most important part, then it doesn't matter, because you want to own it, and I'm good owning it for 2 years, 3 years, 4 years, 5 years, whatever it may be. So that's one. Yes, I look for less expensive stocks so I can maximize the amount of stocks I'm touching. Really, I kind of cap myself at $50 stocks as much as I can. Similar, like, I think, IREN's the most expensive one I have, the $50 stock. That's the most expensive one I have. I prefer to stick to stocks that are somewhat $20, $30, because it kind of seems to be a good mix. But obviously, each account differs. So in our little watch list, we do have a lot of companies that aren't expensive: OSS, Path, SoundHound, BBAI. If you are into data centers, Cypher right now is the cheapest one to run it on. And then we do have some rare earths still in the $10, $15. SMR, which is a $10 stock. TE, I know it's probably up there, but ONDS. So there's a lot of inexpensive companies you can run the wheel on, but you just need to make sure that the option chain is tight spread, good open interest, good volume, and flexibility in expiration dates. Okay, good question. Starting capital. Well, it's always going to come down to what stocks you're playing, because it's going to restrict you, right? And how much income you need to build. So if I'm starting off with a smaller account, I'm not going to focus on heavy premium. Okay. And what do I mean by that is I'm going to be more aggressive on waiting for stock to be higher price. So for me, if I had a smaller account with HIMS, I'm not setting covered calls here. Okay. I'm going to set covered calls when it gets into the 30s, the mid 30s, and then I'm going to set the 41, because I want a juicier premium, but I want the stock to actually gain as much stock appreciation as I can get out of it, which means there might be a couple months where you're not placing any trades for the covered calls, which is fine, because that stock appreciation is going to pay out heavier to your smaller account. But as far as like starting cash, no margin into an account, I would say probably 5,000 would be the smallest. I would probably start introducing the wheel strategy. But what I would really focus on is learning how to use it as a extra tool in your tool belt to add to what you are already currently doing. I wouldn't focus solely on the wheel strategy to start, because you do need to start gaining a little bit more and get that account up a little bit more to start truly seeing. Now, again, if you have endless amounts of time, you're just starting off in the market, you're 20, 21, you're young, you're in the beginning stages. Yeah, start with the wheel strategy from the beginning. It'll compound, it'll get there. You have plenty of time on your side, right? But if you're starting off now and you are, again, not to deter anybody, but if you are in 40s, 50s, and you only have 5,000 right now, then we need to look at a speedier process, and that is going to be getting in and out of companies a lot faster and not letting the compounding side of things take place. It comes down to age, cash you have available, risk tolerance. There's a couple things, because If you have a high risk tolerance, kind of like what we did with ASTX yesterday, right? The premiums are super juicy. The volatility is extreme. It's not something I'm going heavy into, right? I'm doing one contract. Like that's it. I'm not going 10 contracts, 5 contracts, 10. No, we're just going to go one contract at a time. I believe in space long term. It doesn't matter, right? It'll play out. And that's a 27% return on capital from that premium. Even though it's super juicy, I'm still not going heavy into it, right? A portion of my account can make risky 27% premiums, but the majority is not going to be that, okay? So it comes down to your stocks, right? If you're super interested and I want to do it on NVIDIA, it requires more capital. You're not going to be able to start off with your $10,000. If you are willing to be invested into companies like BBAI and SoundHound, right, you can get started with $10,000, no problem. Just comes down to what you're willing to invest in and what those companies cost. Okay. Let's see if Kevin... Oh, got questions. No, it is going to be recorded, so you'll see it there. Yeah, I do both at 80%. Yeah, leaps 30%. It's just, remember what number you see in front of you on your screen gains wise is what you can actually have if you just hit the sell button. What you think it could be is fictional, not real, right? It's what you want it to become, but it's not guaranteed. What is guaranteed is what is sitting in front of your face right this second if you hit that sell button. I'm okay taking 30% wins. 30% wins consistently stacks a lot and fast. Okay? So my quick 30% wins on 3 companies, right? I'm good with that. That stacks. Me waiting out and saying like this 30 though could turn into 10,000% if it just gets here, right? Yes, it absolutely can. And you can sell, if you have 10 contracts, sell 9 of them and let one ride. Let it ride. Okay. Can you explain the ASTX leverage play in detail, what you looked at? Okay, so what I looked at was not ASTX. Okay, because ASTX is ASTS. So I'm trading this stock, but I'm just having this be leveraged. This does what this does. So there's no reason for me to look at ASTX. What I am looking at is ASTS. And what I was looking at was right here. Okay, trend line, bottom, or touched it, rejected it, touched it, rejected it. Finally broke it, came down, retested. Okay, somewhere we're right here in this 84, 83 range. Okay, and we have the 200-day moving average right here at 80. Okay, I even messaged my buddy yesterday when it was red, and I said 82.50 is where I see ASTS going, and it landed 82.41. I think after hours 83. So, yeah, we're good. This is what I saw. I saw it broke out, came back, retested it. I'm good with a CSP, right? We'll make some money if it drops or if it goes back up. I set covered calls, so if it goes up, we're covered. And the premiums are just so juicy that I don't need the stock to appreciate. I just need to have the stock go $1 higher than it currently is, which I think will happen based on being it was a negative 15% day. The premiums were working with us, right? For the CSP side, covered call side was mainly just collecting the premium, CSP, and catching that dollar upside, which I'm good with because I think ASTS again goes to 150, looked at a lot of charts, looked at a lot of projections, a lot of analysts, right? Long term. In a small super play, I don't have as much capital to do an $82 stock, but I do have enough capital to do a $25, $28 stock that pays a juicier premium than even if I did this one. But I chart the normal stock and I trade the leverage stock. There's a couple companies out there that you can do this on. Tesla is a main one. So if you are a Tesla bull, I highly recommend TSLL. Okay. But this is for trading. Leverage stocks are not for buy and hold long term. They are for trading. So you're quickly just setting them and trying to get them called away and consistently capturing the premium. Okay. Hopefully that answers, Pat, what I see on ASTS's chart to trade this. We are technically on the bottom half of this band. So CSP, right? We were right here on like the right here to buy and then set covered calls because I see that this upside can bounce and be good, and then get called away, and we make a good 27% on the premium and be happy with that, right? So that's good with me. I think the leverage one on 80%, yeah, just 80% rule. I just follow in general. Now, if ASTS got to 80% and it was all the way, or not 80%, but the stock was all the way at the top, yeah, close it because it's most likely going to reject you at the top. But I still would just follow the same rule. Just stick to your 80%. If you feel uncomfortable or with whatever's going on in the world and you want to close it, right, close it. But I like ASTS taking a big hit from the space situation yesterday. If you are only exclusively running the wheel strategy for a year on good wheel stocks with lower IV like SoFi, etc., selling CSPs, CCs, moderately, not overly aggressive, what annual rate of return should we expect to make? Well, let's plug and play. Okay. Let's go to a SoFi. So yeah, 50% in the first week. Obviously matters on if it's a 2-week option. No, right? But if it is like a 35 days, 30 days, if I get 50% in that first week, yeah. So 15.55. Let's plug it in. SoFi 1. What was yesterday? 613. 15. Put 07 17. 15. 1. What was it? 51 plus the, I'll just go 55. So a safe company like SoFi and doing it by the 30 delta, which this is a 25 delta. So again, it's going to come down to, did you do the 16? Did you do the 15 in this scenario? 37, 25, right? So it'll come down to a little bit of decision making on that side of things, but playing it safer, 40% annual return in premium alone. And that's what I'm making 3% a month. That is the minimum goal every month in premium is 3% whenever you make a play. 3%. So this should be a minimum of 36%. So I want to collect 36% in premium, and then stock appreciation pushes you way past, obviously, 36%. But if I can beat the S&P 500 in just collecting premium, then, we're killing it. Just collecting the premium. But yeah, 36% is the safe annual return. My goal is 3%. My minimum goal is 3%. My average goal is 5%. And if I can, on a good month, keep collecting 10%. I don't know where we're at. So here's exiting profit. So 4%. As of right now, on average, holding these for about 10 days for my exiting. I go into it thinking 10%. Come out with 4%. Okay. Let's see here. Does that help, Dave? An arm leap sold back in March for 15% win. If I have held for a couple more months, been almost 2,000 win. I had time on my side, but I was down 50% on those leaps for months. So when it turned green, I got out and took the win. We always regret when we miss out. Yeah, it's always tough to keep like watching your old leaps and everything and where they could have gone and everything like that, because again, how many of those leaps, that's one that worked out, but how many of those leaps that you did sell that ended up going down and it could have been zero, right? There's a lot. So, and again, do you have to sell all of them? No. You can always get most of your money back, if not all of it back, and leave one to enjoy a rally. That's what Miguel does. Very good with it, but obviously some can bite. He shares his losses in there as well. He says, hey, look, here's my losses. Lost 2, lost 3, lost 1, lost 4, right? You take losses. So if you consistently stack small wins, though, they will lead up to a bunch, to one big win, and you feel good. You feel, you have your good vibes going. Which is a huge part of trading successful, is being in that positive mindset. So consistently taking a 30 win, a 10 win, a 1 win, like 2%. I've taken a $2 win and I'm just like, just get out, actually, let's reset. Don't like what's going on. No problem. So being quick is perfectly fine. A win's a win, right? It's just like playing any sport, right? It doesn't matter really if you beat the team by 100 points or 10 points. It's a W. It's in the book. It's a W. Next time, look at what you saw on ARM when you got out and what you could have done better next time. Not just, if I just held, I would have done better. No, where on the chart did you sell? Where on the chart was it? Should I have? Were there signs it was going higher? Stuff like that. You got to look back so you next time don't make that decision and lose out. But again, taking wins is part of the game. Okay? Don't get so caught up in, you can always make yourself better, but don't let it weigh you down. If you let it weigh you down, you'll just end up getting in your head, and the next time you should have taken that 30% win is the time that it goes to 0 and then you lost it all and you're like, I should have taken 30% win. It's just part of the game. If it was easy, everybody would do this game. Okay? And this is why I'm a big fan of selling options more than I am a big fan of buying options. Even though buying options, I've made good money, you also lose. Selling options, you win a lot more than buying options. Your win rate's higher, consistency's higher, you're happier, you're less stressed about the market overnight, because all you're doing is buying shares and selling shares. And that's really what you guys got to go into the mindset when running the wheel strategy. I'm buying a stock and I'm selling a stock. There is no other really way to view it, right? Like, I'm buying a stock for this price. I'm selling a stock for this price. It's just shares, but you're getting paid to do it. Instead of just hitting the sell button and selling it and that's the end of it, you get paid to sell it for a certain price. Okay. Provide your perspective on running the wheel strategy in a non-registered margin account during a bear market, including potential benefits, risk, key considerations associated with leverage. Okay, so if you don't have a margin account, that's perfectly fine. I think a lot of places do require you to have a margin account in order to roll options. So make sure you can roll your options before going ahead and starting your wheel strategy. Let's see here, during a bear market. So during a bear market, there's a couple things, okay? One, I think everyone has learned in this most recent dip how the VIX cash position works. Has everyone learned that now and understand why we follow it? I think it's on this one, actually. Okay. When the VIX gets low, you got to start building up cash. Okay. And it's not saying like the second this happens, right? The second 20 drops to 17 or 22 drops to 17, that doesn't mean immediately go sell everything, right? Because it changes in a day. And I think that's what you're about to just put in the chat. Let's see. I'll let it come out. So how it kind of works, okay? You can see here, I'll go to the daily time frame, okay? One, our momentum indicator works on this, so you can see when momentum is kind of shifting up for the VIX right here. And you can kind of see right here, our VIX just turned bearish, okay, on the daily time frame. So one, that's a good thing, right? Our VIX is going down. But if we do see the VIX, okay, is low, and you check the chart, okay, and you see, let me go back to this one, the easy one, okay, and you see it's getting low. We're at 17, so we've been dipping to 16. We went up to 19, and then we carried this down, right? And you see that this is still shifting higher, okay, or we see this moment right here, right, crosses, okay. You can still chart the VIX. You can see that during this whole downtrend right here, this was just a downtrend, okay? And now we're starting to plateau. Okay, this is all kind of taking profits when your stocks kind of start hitting some targets or start getting to the top of their bands, start setting some covered calls, start setting, somehow raising cash. You don't have to sell your positions. You can just set covered calls on your positions. But you can see that the downtrend, and you can see that we started getting a little bit of choppiness happening, which we were living through that volatility of up and down each week with the war. But yeah, and then you can see this long uptrend right here. Okay, this was the whole January, February, March. Okay, so you can see it here, top of the band, waiting for this kind of reversal stuff to happen. So yeah, we want to build up cash when the VIX is low. Doesn't mean the second it drops to that level, but it does mean when your stocks start moving higher and higher and higher and getting to top of the band or getting to targets, you want to start raising cash on those during this time. You can rotate that cash, okay, to undervalued stocks. For example, we're going to use it because I love it, SoFi, right? SoFi is considered undervalued. So if your IREN hits 80, hits 100, and you sell some of that, and SoFi is still sitting at 16, you can rotate it there. Why? Because when SoFi or the market corrects and SoFi is at 16, but IREN's at 80, IREN at 80 is going to drop back down to 50. SoFi at 16 could drop down to 15 and 14, right? Far less drop, but your money's in the market. So if a rally continues higher, SoFi still runs higher and you make money, but your risk is far less off the table. Okay? Hopefully that makes sense. On the VIX, if you guys go to the VIX on TradingView and go to the daily time frame, these American flags, because we are patriotic, when you click on them, tell you what economic events like the PPI or the CPI coming out. It tells you what days they're coming out. So building permits is coming out on the 16th, and we have Fed interest rate decision on June 17th. Guess what? They're not going to do anything. So this just helps you kind of know the economic calendars when you look at the VIX. Okay. Students, let's see if there's anything else. Using flow alerts and Fibonacci targets, explain how flow alerts can use in conjunctions with the Fibonacci targets levels to identify and manage short-term call and put options opportunities, particularly with contracts 30, 45 days to expiration. So I'll go over Fibonacci's in a little bit. And I think what he's talking about, flow alerts, which is going to be our flow bots. How I use the flow bots, let me bring it over here. Okay, well, what the heck. When we start getting alerts like this, Roku, right? Roku after Roku. Or if I'm bullish, that's another Roku. Okay, all for the week. Okay, depends on how early you caught into Roku. Right? But if you go to our chart, and here it is on Thursday, and then we get into Friday, and you start seeing all these options coming through, and you're right here, and you're like, oh, well, I see the bullishness. Yeah, let me go ahead and buy the option. Okay. It's almost like the flow alert is really a stock screener, is how I view it, right? I'm not sure, maybe something to get into. Let me see. Okay, Tesla, $2 million option got put into play. Do you have to follow the option? No, you could buy shares. You don't have to do what they're doing, but it does help you know where to look. Here's our Tesla, okay? Downtrend here. We had our ad. Someone bought an option. I think they think it's going to break out. The daily is starting to curl. I don't know about the 4 hour. The 4 hour did cross. So there's a few things. So I see these alerts come across and I immediately jump to our chart. Does our chart read something similar where it is saying it's bullish or it's bearish? And if it does confirm what they are buying, the whales, because whales are not always right, but if we can confirm with our indicators and their option, then why wouldn't we go ahead and still make that same similar play? Now, again, Tesla is a very expensive stock. Do you have to buy Tesla? No. You can buy TSLL, which is going to be Tesla leverage times 2 for trading. Not long-term holding, but for trading, you can buy TSLL. It is getting close to flipping. You can see that the momentum histogram is close. So next week could be the week. We'll see. So yeah, that's how I use the flow alerts. Alrighty. Next, and let me see if you guys have questions before I go to the next student question. No questions. Cool. Alrighty. Okay, Pat, I see yours. I'm at the last one. Mine, when added, has info appears minimal deviation. So when we only need these two on our charts. Okay, Pat, on your photo you sent on those. Again, this is on the daily. Did you get it figured out? Sorry. Let's see. And then we can kind of go into more stuff. On any time frame it appears. Hold on. Oh. Got it. Okay. What is happening is for the basic wheel strategy, hold on here. Okay, basic wheel chart, you can just use regular candles. Heikin-Ashi candles will populate this because they can't find gaps. Because Heikin-Ashi candles do not allow gaps to happen. The math doesn't allow gaps. So regular candles is what you'd use if you're just running the wheel charting. Heikin-Ashi for our other one. Hopefully that helped. So if you're just running the wheel, the wheel elite and the MACD, I think that's what you have on yours. That's all you need. Yep. Just so you guys can see why I did ONDS yesterday as well. We were sitting right here, bottom half of the band, red day, right on the 200-day moving average. Did I do a 30 delta? I did not do a 30 delta. I did do more aggressive. Why? We are sitting at the 200-day moving average. I am comfortable, even at $9 is below the 200-day moving average. I'm okay with that. And I don't own any in my brokerage account, so I'm okay with my first play being aggressive. My next play would be waiting till we're down here below our break even and seeing if we get to this level. I don't think we do. I think we hold here. But we will see how it all plays out. And I think on the 2 hour, yep, we're bullish. We broke through, retesting, coming down. These kind of do the same thing where they come and retest each other a little bit, but I think that we just see a bounce. So that's why I was a little bit more aggressive with the ONDS play. And you can do that when you're next to your guys' moving averages and a good support level and everything like that. You can be more aggressive with your covered calls and your CSPs. But obviously understand your risk. I did 5. I'm willing to do another 5 or another 10 if we go cheaper. But I'm willing to start with 5 for my account. Okay. I want to go over just the simple stuff of like Fibonacci's, okay? And how to use them, guys. So ASTS was always my favorite example in the past, so I'm going to use it, okay? So you have a simple chart, okay? Simple, basic, every chart you look at. And I'm actually also going to go over setting up your wheel strategy stuff on other charting platforms in case, because you can do it on Robinhood. Robinhood is fine to do your charting wheel strategy. Bollinger Band, 2 moving averages, RSI, and a MACD. So TradingView restricts you guys, so you don't have to, but if you wanted to have access inside the Robinhood app, we can get that set up as well. All right, Fibonacci's. Okay, there are 2 types of Fibonacci's. On your TradingView app, on the top left side here, you will see 1, 2, and on the third one down, it is the first 2 Fibonacci's. Okay, I star them. I don't think it really does anything different if I wanted to look at my favorites. Okay, that's all it is. But you will use the retracements. Retracements is to figure out where the pullbacks could go. Okay, so now all you're going to do is you're going to go to the very bottom of an impulse move. You're going to have to do this a couple times to understand, because Fibonacci's can be like biased. Like I see a Fibonacci can start here. Some people will say, no, it should start here. No, it shouldn't. But in general, there's opinions, right? Same way trend lines can have opinions. Fibonacci's are the same way. That's why I like the Elliott waves, but I don't, because they are opinionated based on the amount of moves. Do you count this as a wave? And I'm not a huge fan of opinions, but I'm not a huge fan of we can all look at this and get a different answer. I don't like that. Not a huge fan of it, but if I get the majority on X saying the same thing and I see the same thing, I'm good with it. But if I start getting mixed reviews, it's probably a best idea to just kind of go with what you are seeing or stay out of it, okay? But if you grab the bottom, okay, of this, bottom, okay, and then go up to the top where this move was, boom, okay, you will see where support can be found, okay? So I turned on, there's a template here, labels. So for you to set it up, you guys can take a screenshot of this live stream that's happening right now to save it. But for your retracement levels, 382, 0.5, 618, 786, 887, and 1. 1 is the bottom, so you can't go below that. If you do, the structure has been lost, okay? And then you'd need to pull back further, okay? So, and I'll explain that. So here are your levels, okay? And it found value right there, right on the deep value. Boom, okay? And bounces, okay? So it's not saying, okay, this is for sure guaranteed, it's going to happen, it bounces off one or this, it's going to bounce off this level or this level. No, it's not. But it does bounce off a lot of them day to day, but where the final reversal happens, that's when those diamonds come into play, okay? But you can see right here, it did touch on the golden, and then it bounced up, and then it came down, found support here, okay, and then eventually carried on with that support. It even bounced here, and then bounced back up, and then bounced here, bounced back up, bounced here. So it did bounce on pretty much every single one of these lines. It held support there, and then it dropped, held support, bounced up. So they're just good indicators to help you figure out where support can be found. Once this structure is lost, if it was to fall down further than your low, because now a new higher low is never created, a lower low is being created, you would then drag this to the next bottom. So if it didn't get held, right, I would then drag it to this, and then this would show me where the levels would continue to go, okay? But you want to see some sort of reversal. So if you found support here and it bounces, right, boom, 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 you're getting in, if you want to keep things simple, with just the MACD, okay, found support. Our MACD flipped bullish. Let me grab a line here. There. Okay, boom. Our MACD flipped bullish here, so you would enter right here. Boom, and then continue your waves until you trimmed or hit targets. So, and we'll go over that part next. Hopefully that makes sense on the Fibonacci's. But you're looking to, and I can pull up on a bunch, it's just not that one, but we can see on the current one that we're on right here, right? Grab the bottom, go to the top. Bottom, go to the top. Okay, where are we at? We're sitting right here in this golden pocket, is what people will call it. Okay, you're really looking to buy somewhere in this golden pocket, and what people will call it would be right. And let me hold on, put the where's the backgrounds there? So what people will do is they'll color all of this gold if they wanted to, and just say this is the golden pocket. This is exactly where you want to be buying inside of here. If you can buy, really you don't even need this one, but golden pocket. But we have trend lines and other support levels as well. But yeah, this is how you can find where support was. It was trying to hold on to this. It dipped, and then SpaceX IPO, obviously, just a random catalyst that causes it to happen. But we can figure out where targets are going to go based on this, okay? So you know how to do the retracements. You grab the bottom and just go to the top of the most recent move to try to figure out where the pullback will go. Now the next step is, how do I know where the target is? And that's a big question for a lot of you guys because it's always nice to know. Okay. Can you show us SMR fibs? Yeah. So after, let me show you how to do the targets real quick. The targets are going to use the same points, but there's one more step. Okay. I'm going to go to the same bottom you went to, the same top you went to. Okay. Now the third one is where the furthest pullback went to. Okay. So this pullback level right here, where did that go to? Okay. And that's what I want. Boom. Okay. And then you have labels. Boom. All right. So we hit target number 132 is target number 2. Okay. Which we've now hit. Okay. And then we have golden target. So we can see our targets here. So 117 is exactly where I took our win on ASTS back in January. And this is why. Hit our first target. Boom. Done. I'm out. Okay. I bought at 53, somewhere in there, and then sold there. Okay. For your settings, targets wise, okay, you have 1, which is your first target. Then you have 1, 2, 3, 6, and 1, 3, 8, 2. Now these are kind of like just sub targets because really your goal is to get to this 157, which is where I think it's going. It's still going to get there. But these are kind of like little trims. This is kind of the bigger resistance. These are smaller resistances. This is a big resistance. So your main ones are going to be the 11618 and the 2618. But all the little ones are other little stopping points that it can find resistance at before it goes to the final targets. Okay. So yeah, that's how you can find those targets. You're just doing the same thing, bottom, top to the pullback. Okay. Once it finds where the pullback was going. SMR. SMR is, and I'm not worried about SMR. Nothing's changed. Okay. Is it giving you another opportunity? Yes, it is. Okay. But as of right now, nothing has changed. I can see, so there's a few things here. Okay. few things. If you wanted to know, you can always find. I'm just trying to find the high lows. Is that going to give it to me? Labels. Okay. Anyway, for the smaller waves here, okay, you don't want to lose this bottom. If we lose this bottom, it's not that we are screwed. I'm not saying that by any means, okay? Let me go to this. And labels. Okay. We still want to hold this 885, which we have done so far. Okay. If you want to look at it at a bigger picture and a bigger scale, all you're going to do is grab the very bottom and go to the very top. Okay. Let's look at the big picture here. Bottom to the very top. Okay. So you can kind of see right here, right? We're finding support on this fib. We found support again on this fib. We are trying to break this fib and we can't seem to break this fib. Like we break it, but we reject it immediately, right? So we're really just bouncing in between here. Could we go to this little 8 support? Yes, we could. Absolutely. We could lose this short-term structure and still hold the big-term structure, which, again, there's no problem here. Depending on what, obviously, if you hold any short-term options, that's going to be a different story. But this is just presenting. I'm glad we did covered calls and starting to do CSPs again. But I think for now, as long as we keep 885, our structure remains. Okay. But this is how you kind of look at big structure. Okay. To understand if this small was to be lost, where would be the next? And we would see support at 8, similar to finding support here. Okay. As far as where our targets go and why we have the targets we have, we want to go here to the top and here, because this keeps going down. So as of right now, if the bottom is in, targets, labels. Okay. We've already hit that. So I'm just putting the main stuff on there. Okay. 18. Okay. Which is, you can see we hit this. Let me move this line all the way across, extend left. I like to extend it when I want to see, does it line up with other supports and resistances. So yeah, you can see support and it turned into resistance level, down, reject it, down, reject, bounce, broke it, still fell back through, bounce, down. So this is clearly a rejection line. So we're still looking to hit to 18. I think that still happens with nuclear coming into play. Nothing has changed for that. It's just a little bit more time, but just keep running the wheel on it. Top band, bottom band, keep those same things. And then we plan to basically how this works, guys, is once you have your first wave, meaning your first up and pull back and make a new higher low, okay, which we still are at a higher low, you then do this, okay? Now it's going to find rejection, but it goes like this. Let me grab these numbers. Where's these numbers? Okay, so this is 0.0, okay? These are pretty much equal, so 1, okay? Pull back, which is 2, right? So to find your targets, you went 1, or bottom, top, pull back. Cool? Okay, so that's 2. Okay, then it goes to 3, which is your golden target. Then it goes back down to here, which is your number 4, and then back to 5. Okay, so that's how this works out. It goes, now I'll show you. Boom. Okay, this is how the waves work. So once you can get this first higher low into place, the rest should follow. And that's what we're looking for. Right now, we just made a lower low. We just don't want to make a new low to this 885. Otherwise, we have to then wait for the stock to make a new higher low and then chart those pivot points. So as long as we can maintain this. So we're going to see SMR, nothing's changed. Weekly time frame is still bullish. That's the one thing that's holding us still here, is with the MACD and everything still bullish on the weekly time frame. we still feel good, especially if the war is going to end and stuff like that's going to happen here shortly. I think SMR is still going to bounce and everything should bounce, which it showed great strength yesterday with everything else for the most part being red. And if I look at X on a bunch of it, okay, getting caught up in all the short-term noise. So like here's one, right? Don't rush it. Could happen. $7.75, $8, right? Remove the pennies. $8. Okay. He's calling for 8. He's also calling for hims to 10. Okay. Not everyone's going to get them right. So to each their own. What you guys mainly need to focus on, the big wave, the big target, okay, is 91. So he might be bearish short term, $7.75, but he knows that it ain't going to matter if you bought some now, buy some tomorrow, buy some in a week, buy some in a month. It ain't going to matter because with the main wave target hitting 91 is the true target. Here's another one. He has, so this is the point. This is new. This is the same SMR. He has 11. Could go to 6. The other guy says could go to 7. There's so much speculation out there on where the bottom truly could be. Okay, but doesn't matter. He shows wave 3 target way higher than where it currently is today. Okay, same thing. He sees 753 being a bottom, sees that little resistance that we were fighting. Okay, but he's still looking for 82 to 100. So he says it could be in the beginning of 2027. Obviously, it doesn't just go from here to there in one night. It means it'll gradually be here. So it'll be somewhere, 20s or something like that by this next rally, something like that. So getting caught up on the whole short-term noise, which is why I don't care to care about the short-term noise, because as long as my long-term target and we can make money in between today and that long-term target, then we will continue to grow and be just fine. Okay. Don't get so caught up. So there's a trick. If you guys are on Robinhood, okay, when you're saying going to 91 at target, how long term is that? Not looking 10 to 15 years. No. I think most people with the targets they're giving is typically looking for a target of 1 to 2 years is typically how it kind of goes. And for most of these targets, you have to think that most of these targets are happening in the term of Trump in office. Because that's the only time frame we know of anything, right? We only know what's kind of happening in this 3 years that's left, right? And then there's uncertainty all over again in the last year when the presidency election happens and everything, and shit kind of goes weird. So, now, am I holding for that long-term target? No. What am I doing? I'm running the wheel. But I want to run the wheel on companies that I know have long-term higher targets, because if anything was to happen, the drawdowns, whatever may happen, our long-term outlook is very positive, right? That's what I look for. I want these companies to be at their near bottom. Never know when the true bottom is until the bottom was actually found and you're 2 years later and you're up and up and up, right? But if I can run the wheel, starting the wheel on a company down here, and we see a 10 times potential in a company, then run the wheel on it. Any dip is just another opportunity. Any rise is an opportunity to set covered calls on its way up. Can it get called away? Absolutely. Is it going to 90 tomorrow? No, it's not. It's not going to 90 next month. It's not. Okay? So just continue the strategy and use this one as one of the ones that you're going to run the wheel on for the next 1 to 2 years. That's how I look at it. Right? Does that make sense, dog? This just is one of the stocks that'll be in your account to run the wheel on until you finally get to your targets. Perfect. A little tip, okay? A little tip on Robinhood. And this is how I view my account. I don't know if you guys will be able to see it. I don't know. Do you see the little stars? Got a text. Do you see the little stars? See how I can't see what my account total is? That's how I look at my account. Why? because the dollar amount you see makes you emotional. It makes you want to close a position, right? Because you're like, oh my God, I'm down $1,000. I need to close it. I don't want to lose any more, right? But if I see a percentage, I'm not taking the time to do the math. I'm not, right? And I want to trade the position based on the chart. I don't want to trade the position just because my dollar amount, right? Some people won't sell things in their account because, oh, I'm this close to being at my all-time highs. Well, guess what? SMR, SoFi, HIMS, they don't give a shit about your all-time highs. They don't care, right? So the stock isn't going to go higher just because you're close to your all-time highs, right? So I leave my account balance out of the emotional equation, okay? Trade the stock how they're supposed to be traded, and the account will grow as you take wins, right? I know I took a win, my account got bigger, right? Do I look at it occasionally? Yeah, I look at it, but on my day-to-day trading, I don't want to look at it. I don't want to see. If it's a big red day, guess what? I'm not looking at my account. Why? Because you're going to get emotional. You don't want that. I don't want emotional trading to take over what we have built and what we have been doing for months and years, okay? That's just my helpful hint, because I get my buddies calling me all the time on the big red days, and they're like, oh man, today hurts. I'm like, I have no clue. I'm not looking, right? I don't need to look. I can look right here at the stock share price and know, yeah, I'm down. Do I know how much? I mean, I can do simple math. Yeah, $2, 10,000 shares, right? 20 grand, I'm down. But I'm not looking at it in my account to see, oh my God, I'm down this amount, I've lost this much, or, because it doesn't matter. I'm not selling it. So I have bigger plans for where things are going. So hopefully that can help you guys out with feeling emotionally trading when looking at your account, or feeling bad on the day because it's red, right? I see I'm down 0.5%. Okay, move on. Anyway, that's just my one little helpful hint. Does anyone have questions on fib levels? Nope. So I recommend taking a chart, playing with it, what I will do all the time, okay? And you're not going to draw the first one right every time, okay? So for example, like this one, right? You got this bottom and you got this top, okay? Well, it didn't really find support, and then it made a new low. Okay, move on. Boom. No. Okay. So, and then you just go to the bottom. Like, see where things are kind of lining up, support, resistance. You can see it's rejected here a couple times, rejected here. So this is kind of where the fib levels are bouncing off of. You're going to have to play with it in the beginning to understand where the pivot points are, but you're really looking for impulse waves. Impulse meaning, right, like you're walking down a store and you impulse buy something, right? You just grab it, snatch it. Okay, same thing. This is an impulse. Look, boo, shot right up. Boo, shot right up, right? Those are impulse. This is consolidation. Okay, well, this is impulse, this little pop. Okay, but you're looking for those impulse moves. Okay, similar here, right? Boom, impulse. Grab the bottom, grab the top, and where have we been finding support? Right there on the golden Fibonacci. Okay. So if you want to know where a company's value is and if it's worth it, okay, grab the very low, 52-week low, just grab the low and grab the high. Zoom out, okay? I can go to, HIMS. Let's go to HIMS. Delete these for a sec, okay? I'm going to grab the bottom and grab the top. Bottom, 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 boom. Bottom, grab the top. Look at that. We are struggling to break the golden Fibonacci. And we dipped right below this and we came right back up, okay? But we are struggling here. Labeled. But if you can grab companies from the top or the bottom to the top, good companies, I can't help you pick it. You're not investing into a newspaper stand, right? But if you pick your good companies and can buy them underneath your golden pockets, okay, and into deep value, okay, those are going to be long-term, great, successful companies and opportunities to buy, okay? This is why people keep saying 10. It's because it went down and they were saying, oh, it's going to go to 10 and didn't get there, okay? So, yeah. This is a good idea when you are down and the company's way up. I don't know what company we're talking. What company has ran? It's AXTI, right? Is the one company? Yeah. Okay. Here. Where should I think about buying this company? Okay. Go to the bottom. Go to the top. I want to buy golden or lower. Okay. So I'm not really interested in this company until it's $56 or less. It will get there. Okay. Is there going to be a little pop up? Yep, probably. It's going to pop up and then it's going to drop one more down. Okay. And it's going to land right here at 56. Then I'm interested in these kind of companies. Let them have their run. That way I know where it's going to pull back and I can tell you where the next target is going to go. Okay. Welcome in, James. What other questions you guys got? And if you can't type out the question, you guys can raise your hand and I can invite you in and you guys can ask verbally if that's easier for you guys. What have you guys realized, needed help with, wanting to learn? Where's something that you messed up on? You don't understand how you would have done it differently. Here for these questions. And if nothing, then that's crazy. No, I'm just kidding. Questions on wheel strategy. Questions on whatever you guys want. We can talk about them. Palantir. Palantir. Let's check it out. So I grabbed the bottom here and went to the very top. And then I was like, okay, where is the pullbacks? So clearly support is trying to be held here, like you said, around this 130 range. A few little dips below, but holding overall strong. Okay, if this cannot hold and hold this previous area, basically 125 to 130 range, if it can't hold that and it does fall, then yeah, you are heading back down to 107 would be roughly the next area, basically 105 would be the next area, and then the golden pocket would be 83 for Palantir. Let me pull up all of these real quick. So the monthly flow has not changed. Okay, monthly flow is still red. So basically the big bull runs happen when this is green. This is red. Now, waiting for this monthly to turn green usually means the company has already had a good run. For example, let me show you just so you can see. We'll go back to it. Not done. Let's pull it up this way. HIMS. Right? It's getting there, but look how much you've already missed out on, right? It's already 100% run from the bottom, close to it. And you still haven't gotten the green there. So, but we do start seeing right on the weekly time frame for HIMS, this is still bullish, This is still up, volume up. This is green. This is trending that way. Like everything is showing bullish. For Palantir wise, on the weekly time frame, we're starting to get a curl action, but still now rejecting that. So there, let's see, still choppy. This is a lot of chop happening. Red volume. I felt like, oh man, their volume isn't that high. I thought their volume was a lot higher than that. Just looking. What's our monthly? Bearish on the monthly. Monthly's always going to lag though. Don't need that. Palantir's tough. I used to own Palantir. Everyone pretty much owned Palantir when it was super cheap. Now it's hard for me to want to buy it again. I think your 130 is fine. I don't know if it's your total positions in there because I still have targets up here. To go higher, I can look up on X and find tons of people long term on it. But I do think lower is definitely possible. And again, the war is going to change a lot of things like that. No problem. I'll look up because I have a few trials that I have done on Palantir that some of these other guys have charted. So you can kind of see. But it's really throwing a lot of mixed signals to me. But yeah, the same thing. Here you go, 83 to 106. That's what I'm talking about. Like this is kind of where I'm thinking it wants to go to based on it just kind of struggling here to really break out of this consolidation. So there's one guy, same levels I see. This Trend Spider kind of posts some. Let's see here. Same thing he's saying. So I think for the overall consensus, a lot of people think that it is going to go to the 106 range. Basically, test $100 and try to make sure it can stay in those hundreds. Is where I really see Palantir going. Here it is. Same thing. 130, 106, 83. You want to be buying somewhere in here for the bulk of your purchase. You can still nibble here because a reversal is not uncalled for here. But when you want to dive in deeper, it's going to be at these levels. Okay, so just understand that's what the downside, where the downside could be, and where you would want to be buying more. And then you can see this guy, 130 to 260. I agree, 260. It's just that these other levels can come into play. So that's why I said taking a nibble here on this first fib level is not a bad idea. Just be prepared for the next two levels down to add to that position. And I wouldn't worry about Palantir in the long term, right? It's so intertwined with our government and getting contracts. And Trump obviously is a fan of them. So we know how that can play out sometimes. So yeah, I think that this is a good stock. It's also defense stock. It's government contract stock. So even during hard times, even though it can pull back, their company is still improving during bad times. And when the market then does turn around, it accelerates a lot faster than other companies may because it, during the bad times, continue to improve on their business side of things. If you guys aren't looking at X when you guys are initially also thinking of buying into something, I highly recommend it. This is pretty much the only place I look at for my news, research, minus the AI stuff. But you want to make sure people are also kind of seeing what you are seeing. And if everything is kind of lining up with what you see and where you want the company to go, where you think it can go and everything like that, then you would go ahead and continue. Got easy out. We enjoyed it. Nice. I appreciate it, Kev. Yeah, and again, it's your guys' weekend too. So if you guys want, ask whatever questions you guys want to get, and we'll cut it. If there's no more questions, and again, I answer all questions in the student section as well, every week. So if you guys don't have questions now, you guys can always ask them later. I'll make a video, and do that. So just want to make sure everyone got their questions answered. And yeah, of course, guys, keep it up. Just remember what we've learned going into this dip and be ready for that next one. But right now, you're getting ready for, I still think, another 1-2 weeks of choppy green, red, kind of going to be a mix between each stock, each sector. But I do think we're not done. The rally's not done. So just be ready. Yep. And just be ready for the next one, guys, because the next opportunity, that when the next dip happens, I think the dip on the next one is significantly worse, way worse than what this dip was. Okay? So just be ready. If you guys aren't following Ask Livermore, I have done a 30-day trial subscription on him, just so you guys can see. Not my trading style. Not my trading style whatsoever. This is a great little graphic here. But I'll show you one thing. I won't go deep into it all, but look at this. Look how many companies he holds. He's down 30%, 10%, 4%, 2%. I mean, there's very few in this big holdings he has that is actually positive. And positive by a lot. So, yeah, I can't do that. 2 shares, that's more, causes me more stress than the worth of 2 shares gained, for me at least. So, just rather go heavier into my true conviction stocks. But yeah, follow him as well. I think he does post good stuff for the free stuff. I already canceled my little trial thing, so. But overall, fairly good. So, but yep. Today, right? People, oh, it's gonna crash. Well, it goes higher, and then the crash happens, and the crash didn't even go lower than where it was, right? So long-term investing, it's all gonna be okay. Just keep building, keep setting covered calls, collecting premium. Win's a win. Keep stacking the cash. Like I said in my recent post, guys, do I care if all my stuff gets called away? No. Why? Because I made my premium. I sold companies for what I'm willing to sell them for, right? If I don't sell them, I win. I made my premium. If I do sell them, I made my premium, and I got to make the stock appreciation. SoFi goes to 20. Guess what? SoFi is going to bounce back probably to 18, 19, back up to 22, back down to 20, right? It's all going to fluctuate. It's all going to bounce. It's all going to do that. Like, companies come back. Could you have made more that ride? Sure. Could you make more on the next ride? Yes. There's always opportunity. Okay? So don't get so caught up on, I could have made this much more. And then 3 days later, right? What was it? ONDS, or maybe SMR. I was like, oh, I sold. 2 days later, it was up big, right? And then now it's way down. Can't time it perfectly. Overall, though, we did just fine. So super excited for what we got going on. If you guys have recommendations, suggestions, anything like that, I'm going to start doing some of those deep dives onto some companies as well. So I'm just starting to get into that. So I'll open the floodgates to kind of figuring out what companies you guys want. Maybe I'll do a poll and stuff and kind of get that going. So we'll see. Alrighty, guys, enjoy your weekend. Have fun. Enjoy the family. Hopefully they sign a war deal. Everything's green on Monday, and we can just continue being happy. Other than that, enjoy the weekend, guys. If you guys have questions or anything comes up or anything like that, just let me know, and I can still make a video for Sunday. Still just put in the student request section today, and I will still make another video. C-Man can stand for a lot of things, Dave. Just kidding. Have a good one, Dave. I'll talk to you guys later.